Dow Jones Stocks Index once more appears imminently ready to set a new all-time high after closing Friday at 18,543, barely 50 points away from its last closing all-time high. Well, given the perma-doom of not just the past year, but for the duration of this bull market, then it should be clear that most stock market analysts, perhaps as many as 95%, just don't get it and likely never will, which is indicative of a systemic defective thought process, which again should not be so surprising since it's a case of new analysts learning from old failed analysts forced to make a living by writing and selling books on trading. If you think you're going to find the answers to trading in books and courses, then think again. Instead, in my experience, the only thing that actually works is through the mechanism of positive and negative reinforcement, i.e. by actually trading by reacting to price movements in real time and then repeatedly being conditioned by the consequences of trading profits and losses. That's it. Not technical analysis, not Elliott wave theory, not Gann analysis, or not any of it, as in fact the tool does not even matter. Even a humble trend line will do. For all technical analysis really is a sales industry for the gullible to think they can pick up a book on trading or buy a course or software package and then succeed in trading. It's just not going to happen that way. You don't win gold medals at the Olympics without putting in many years of hard training, and so it is for successful trading. So here we stand in a supposed bear market that's just about to set another new all-time high. Trading is reacting to price movements in real time. Investing is acting on high confidence forecast or roadmaps against which to measure strength or weakness and thus to adjust positions accordingly. And that's it. This is nothing new, for I've been stating this for the decade that the market oracle has been in existence. So technical analysis does not matter. And most of the economic data does not really matter either, nor do interest rates, though yes, central bank money printing does matter, for asset prices are leveraged to central bank money printing inflation. But what starts or ends bull markets is none of that. What ends bull markets is usually an outside factor, which is why many analysts have bought into Nissim Taleb's black swans, which in my opinion is just an excuse for having blinkered vision, which is why my analysis tends to deviate far beyond the charts and graphs that most obsess over, for they only ever paint a mere fragment of the unfolding picture. So yes, like all bull markets before it, this bull market will end, but it's not going to be for any of the reasons the perma-wrong crowd have been wrongly crowing about for the past 8 years, such as stocks being in a bubble. For the fundamental fact is that stocks are not in a bubble. In fact, during my trading life, general stock indices have only really once been in a bubble, and that was in the 1980s bull market, which really was a mania that most had convinced themselves was just never going to end, right up to the point that the stock market crashed in October 1987, experiencing a one-day plunge near twice that of the great crash of 1929. As for why the Dow crashed by 22% in one day instead of entering a bear market, well, that was likely due to programmed trading that triggered waves of automated selling right into the day's close, selling that continued in the futures markets, taking the Dow at least another 200 points lower, that was reversed by the Fed on Tuesday's open. So do see my comprehensive article on how I traded the 1987 crash that further discusses the real secrets for successful trading. The key lesson I learned from 1987 was to have a list of stocks at hand that I would like to buy if they were cheaper, which is what the 1987 crash was. the mother of all buying opportunities. And then along came the great 1990s bull market that literally climbed a wall of worry. It was never supposed to have happened. Even Greenspan in 1996 at Dow 6K warned of irrational exuberance that the perma-doom crowd jumped on as a major signal for its imminent end. So what did the stock market do? It continued higher for another 3 full years, near doubling from Dow 6K to 12K. And before you comment, yes, tech stocks were in a bubble. However, the point is that they were in a bubble for a good 3 years that just kept inflating. And most investors recognized that tech stocks were in a bubble that would someday burst. But the point is, the longer a bubble inflates, then even if investors know that stocks are in a bubble, they buy anyway because they think the bubble could just keep inflating for a few more years. Which is why many tech stock investors got so badly burned. Not because they did not recognize that tech stocks were in a bubble, but that virtually everyone had assumed that it would continue inflating for several more years. Instead, it ended with the aptly named lastminute.com flotation. And then the tech stock bubble burst and it took the general stock market indices lower and the economy down with it. And then we come to the last stocks bull market of 2002 to 2007, which clearly was not a bubble when it ended. What killed the last stocks bull market was the banking crime syndicate as their mortgage-backed toxic bonds exploded, triggering the financial crisis and the housing crash as well as the stocks bear market. So here we stand today with the Dow once more near setting a new all-time high, and in my consistent opinion, this bull market most closely resembles the 1990s decade-long bull market. I'm not saying that with the benefit of 7 years of hindsight, but has been my consistent view that I've iterated virtually ever since this bull market began in March 2009, that this bull market, just like the 1990s, will turn out to be one of the greatest bull markets in history, going for far higher and longer than anyone can imagine, just as did the 1990s bull market. Remember, according to many doom merchants out there today who were around in the 1990s, that the 1990s bull market was supposed to have ended in 1994 at around Dow 4000. Instead, it went on for another 6 years to triple to near Dow 12,000. Something to keep in mind, because this bull market may not even be at the halfway mark yet. Are stocks today in a bubble? No. Could the stocks bull market end? Yes. But it won't be for any of the reasons that the permanently clueless are coming out with. It wasn't in 1987, it wasn't in 2000, and it wasn't in 2007. The reason why this stocks bull market will end someday is already out there, quietly building its stocks bull market valuation destroying capacity. Which is why my analysis tends to veer so often far away from the markets that from time to time I get messages and comments why I don't just stick to market analysis and forecasts, to which my reply is that my concluding forecasts are from the sum of all of my analysis, and it is thus just as important to know what the likes of Tsar Putin and the Chinese totalitarian state are planning for the West in their great game of infiltration through migration of millions of agents and sleeper cells abroad than peering at stock charts and economic data, which perhaps would paint less than 50% of the picture, generating a mere coin toss probability. And not forgetting the North Korean fruitcake, or the fact that Islamic State has already infected the West, but not for the reasons most would imagine, not through ideology or terrorism, but rather the reaction of Christian fundamentalism, the likes of Donald Trump and the emerging police states with their death squads that black men in the United States don't need any reminder of, and which we in Britain will soon be getting used to, armed police killing the innocent in the name of preventing terrorism. A case of kill first and ask questions later. And then there is the mega trend driver of all, climate change, that I've covered extensively in the following article, which the truly clueless don't even recognise as being real, which instead will be the key driver for a century of bull and bear markets that will ride waves of climate change events, from environmental and economic consequences to the many future wars for resources, which is why one's focus should be on the likes of Russia and China. So bear this in mind as you read and watch stock market doom merchants who obsess over mere fragments of the big picture, and thus will likely miss the real drivers of whole bull and bear markets. In the meantime, continue to enjoy this central banking induced bull market as it puts in a series of new all-time highs all the way into 2017, and remember to subscribe to this YouTube channel for ongoing analysis and forthcoming detailed trend forecasts.